Standard Chartered shares up almost 5% after the UK and Asia-listed bank settles with New York regulators over money laundering charges linked to deals with Iran. I'm Jamie McGeever and this is today's Market Pulse. Well, the bank agrees to pay a $340 million fine, but the real cost could be much higher. Joining me now is Alex Smith, European Head of Financial Services coverage here at Reuters. Alex, as we said, their shares up today, but still down around 10% since the allegations first surfaced. That means that $5.5 billion has been wiped off the bank's market cap.
Yeah, this has been a very damaging episode for Standard Chartered so far. And obviously there has been some recouping of the share price, but they've paid up the $340 million just to one agency, that's to the New York banking regulator and to Benjamin Lawsky, who's came out last week and came out with some very, very strong accusations against Standard Chartered, which they've now settled on. And it's important for them to put that behind them, which is why Peter Sands, the CEO, went over to New York this week to actually conduct the negotiations himself. But there is still more to be done. There are four other agencies that Standard Chartered is in the process of talking to, which we reported this morning, and those negotiations are ongoing.
So the shares are up around 5%, and that would suggest that investors think that 340 million settlement was something on the low side, but the bank, as you say, may have to keep aside more for more fines.
The big unknown, really, what these settlements, how big they could be. There had been talk about a bigger settlement with the DFS. That hasn't come about, but as we said earlier, there are bigger, potentially there are other ones that they have to settle, and analysts are still talking about a total of up to $1 billion, which obviously is a big chunk for Standard Chartered to have to pay out.
It's a big chunk for one bank, but of course the threat of fines from regulators is hanging over many banks. For example, the LIBOR probe is still ongoing. Can we quantify how much banks are having to set aside for potential fines there?
I think investors are finding it very hard to get their heads around regulatory risk now. And obviously in the case of the DFS in New York this week, some very damaging accusations were made against Standard Chartered, as we saw with the share price reaction. And the fact is they don't know, but they're obviously treating it fairly warily, because that lack of is what investors like least, as we know, is the uncertainty. So in what seems to have driven Standard Chartered to some degree in this case was investor pressure, just to get out there and get it resolved as quickly as possible to take away that uncertainty.
And finally, from what you're hearing from portfolio managers and fund managers and investors out there in the market, are banks a buy just yet, or are they still a sell?
Well, you mentioned LIBOR. LIBOR's still a big unknown in terms of the regulatory risk. We saw Barclays pay $450 million to settle its LIBOR case, and in fact that was with a discount. That they took a 30% discount on that, and we still don't know what others are going to have to pay. And I think investors we're talking to are still being pretty cautious about this. It was interesting, certainly from the sell side. Credit Suisse had a note out this morning on Standard Chartered, and it retained a neutral stance on Standard Chartered in this instance.
Okay, Alex, thank you very much. My thanks there to Alex Smith of Reuters. Well, let's stick with Standard Chartered for our chart of the day. As we highlighted on the 7th of August, the day StanChart shares plunged on news of that probe. Major technical support lay at just under 1100 pence. That was the 61.8% Fibonacci retracement of the more than 2-year bull market rally from around 530 pence to just under 2000. As this chart shows, that support proved to be solid as a rock. Who said technical analysis doesn't work? Well, that's all for now, but do watch us at this time every weekday for Market Pulse, a look at what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.